Hello and welcome to Crux Investor. We caught up today with Kevin Smith, CEO at Gold Mountain Mining. He's got a very aggressive plan ahead of him, lots of deliverables this year, and for a new story and a new CEO to the public markets. We're intrigued to hear what he had to say, discuss and indeed the company itself and its chance of success. You can find that at cruxinvestor.com/club, where you can also find detailed company reports and analysis. We've got conversations with experts from around the world on a variety of companies and commodities, including gold and the precious metals market. We've got training courses to help you with your diligence process. We've done summaries of all the interviews that we've done to save you some time, because we know you're busy people. But most excitingly of all, we have a thriving community of investors sharing their thoughts and ideas with each other in a nice, safe and friendly environment, free from judgment, trolling and abuse. And if you feel like that sounds nice to you, and I hope it does, go and join them at cruxinvestor.com/club. We love your feedback too, so give us a like, we appreciate it. Leave your thoughts below. We'll get back to absolutely everyone. And if you want to see precisely what we talked to Kevin about today, take a look in the description below. Kevin, how are you, sir?
I'm very good. How are you doing?
I'm fantastic, but I'm not sitting beside a lovely, gorgeous harbour. That's with all those boats. Any of those boats yours?
No, unfortunately, all the money goes into Gold Mountain at the moment. No boats yet.
Correct answer. Fantastic. Well, I'm slightly jealous of your backdrop for sure. I tell you what, just a favor, why don't we kick off with just a 1-minute overview from you of the story for people new to this, including ourselves, because we've not spoken, and then I'll pick it up with some questions from there, okay?
Sounds good. So Gold Mountain Mining is a new issuer as of December 31st. We have a pretty aggressive game plan to not only drill and explore the property, but also to get into near-term production and use the proceeds of mining to expand this into a larger production scenario, and then use the cash flow as a foundation to build a larger gold producer here in British Columbia. And we're really excited about the opportunity. It's a little bit different flavor than some of our peers in the mining industry. But so far, the response has been really positive, and we've got a lot of exciting updates coming down the line in the next 3 to 6 months here.
Beautiful. Okay. You ever run a public company before?
No, this is my first public company deal.
Right. Who's helping you?
We've got a lot of help. I've got, our advisory crew is some of the best in the business. You got Tukey Angus, who's a mining legend here in Vancouver. He's helping me on, the structure and the build out of the business, mergers and acquisitions, which is what he's famous for. We've got Daniel Coons down in Idaho. He's got an extremely technical team. Prime Mining would be a company that you can follow of his that's obviously been a smashing success. And then Dr. Quinton Henning, he's also on the advisory team. He tried to buy this asset 5 or 6 years ago and wasn't able to get his hands on it. So he's looking at this as a second chance. And anytime you can bring a gentleman like that around a deal, especially with a young management team, huge opportunity for us. So we're really excited to have those guys. And then, we have a strong board as well. Keith Minty, former Mining Man of the Year, he's infamous for running really tight and lean operations. So he's come in and helped us with our business model, making sure we're flushing out pricing correctly. He's a bit of a mentor to our president, Ronald Wu. They've worked together for years, so huge to have Keith on side. We have Blake Steele, gentleman out of Hong Kong. He's helping us on the capital market side. We have Howard Jones, formerly corporate development with Pembina Pipelines. Saw that company built out from early stages now to, I think it's $17 billion organization. So, we're a young management team, but we've surrounded ourselves with some really strong players. And then our management, myself, I have a real estate development and construction background. That ties into mining, and I have an ability to raise capital. And then I've surrounded myself with some really strong mining engineers. Since we're going into production, Ronald Wu, he's built 8 or 9 of these type of projects here in British Columbia. And then Grant Carlson, our COO, formerly with Taseko Mines. And these two gentlemen found this project. I'm fortunate enough to be a part of it with them and help them build it out on the capital market side. And we're really excited to march this into production.
Okay, so a lot of people involved in a small company, and some of those will be at the end of a phone call for you when you need it, and some of them are going to be a bit more active than others. So who are the conversations you have with who are the conversations that you have conversations with on a daily basis, weekly basis? I mean, who's the actual team on this?
Yeah, so myself, obviously, and I'm working with Ron Wu, who's our president, Grant Carlson, who's our COO, and Alex Bayer, who is in-house counsel, but also extremely active on the business development side. It's unique for a company this size to have in-house counsel, but with how active we are, it allows us to move very quickly on contracts and building out the business, as opposed to moving at the speed of an outside firm. So a lot of people question us on that, but it's worked out fantastic so far. We've had a lot of good news flow, and we've made a lot of really good announcements as far as big contracts that show we're real about putting this thing into production.
What do you mean big contracts?
We have an ore purchase agreement with New Gold. They have a facility in Kamloops called New Afton, 18,000 ton per day facility. They're looking to bump up their gold grade on their copper con. 130 kilometer from our site allows us to avoid the big capex and expense of building a mill right out of the gate. It also allows us to avoid an environmental assessment, which allows us, again, to get back into that lean startup model, cash flow initially, and we can use that cash flow to develop and build the company out, rather than waiting 3 or 4 years and sinking and diluting our company, sinking tons of money into expansion right out of the gate. This allows us to raise a little bit of capital, get it up off the ground, and expand in a non-dilutive manner. So coming from a private equity background, really conscious of the cap table and dilution. And, I wanted to build a business that would have cash flow early. And that's what attracted me to Ron and Grant and this asset, the Elk Project.
Right. Okay. So we're talking of diluting and, keeping costs in check. Let's talk about your G&A. How much do you guys pay yourselves?
Management doesn't take any salaries at the moment. We're all equity driven. What's good for the shareholders is good for management. And we've made a commitment not to take any salaries until we get this project into cash flow.
Right. Okay. And then I guess you'll announce to the market how much you're going to pay yourselves. Right. If I look at some of the advisory board, I mean, Quinton Henning, obviously, and I guess he comes with a kind of Crescat stamp of authority. Did they put money into this latest round, this $10 million?
Yeah, Crescat came in with the lead order. We were approached by them. They asked if we'd be willing to take on another financing. Obviously, when a group like that comes around, you take a serious look at the opportunity. It made a lot of sense. We had lead orders on top of that from previous investors who liked the progress we'd made so far. We initially came out for $5 million. Was heavily oversubscribed. And as a company, we took the opportunity to bring in another $5 million. And that allows us to really accelerate our exploration program, drive the permitting process across the line, and confidently go into another phase of exploration at the same time as building out the project. So that capital allows us to continue, to be hard on the throttle and pushing forward.
Okay, well, let's talk about the project that you've kind of rolled into your presumably CPC structure. What was it that you bought? What did you know about it before you kind of walked into it? I'm always intrigued by the business model. And then, what is the plan? So what did you walk in trying to set out and then achieve?
Yeah, what really attracted me to the project was the fact that there was an opportunity to go into near-term cash flow. Again, I want to build a real business here, and I want to get it into production so that we can use those proceeds of mining to expand. I also like the guys that were running it. They're mining engineers. They have experience with these types of assets, and they're extremely motivated to get it into production as well. I didn't want to be in a scenario where we were just, endlessly drilling and there was no real path to getting revenue in the door. And then also it came with a ton of infrastructure already in place, right? Anytime you can buy an asset with 127,000 meters of drilling, a 500,000 ounce high grade deposit already in place, and, a lot of upside potential based on drilling in other areas. And we're really just infilling and stepping out right now to add ounces as opposed to, shooting in the dark and guessing. So while this isn't necessarily the huge splashy discovery play, I think there's a lot of really exciting upside. And when you can do that in a non-dilutive manner, early investors and supporters are going to be rewarded handsomely, in my opinion.
Yeah, the grades are good, just over 5 grams per ton gold. Relatively low capex as well. So this is sort of what, open pit out of the gate. Is that the idea? Because I notice you're also talking about investigating whether you go underground too.
Yeah, so we came out with a PEA in August that's open pit only. And we're really confident in that scenario, and that's why we're able to drive into production. But some of the feedback from some of our advisors was, because the grades are so rich underground, to really take a serious look at underground potential and running a hybrid open pit underground scenario. We engaged JDS, who, are the best in the business. They're based out of Vancouver and Kelowna like us, so they're really close to the project. And we've brought them in to take a look at an underground scenario, which would further increase the economics and allow us to chase that really high grade that's underground.
But the reaction in the market so far has been, it's a relatively small project initially, isn't it? So most of that money is going straight back in the ground. So.
Absolutely, yeah. All the money is going straight into the ground. We just finished our phase 1. The drills just shut down for breakup. We've released the first half of our assay results, which were extremely encouraging. Every single hole on phase 1 hit mineralization, so 41 for 41 on an 8,000 meter program. So, again, having an asset with this much data allows us to be extremely efficient with the drill. And we're going to, as soon as breakup's done, we're going to go right back into another 8,000 meter drill program and continue bolting ounces onto this resource. A lot of people have decided the elk was, only going to be a certain size. And, we're out to show the market that we think we can drive this up to 1 million ounces and beyond. And then, that production scenario as well gives us a great foundation to build off of for a larger gold mining company here in BC.
But how do you build it? I guess my question was more about, I get you've got $10 million and you're going to spend that and put that money in the ground and your G&A is really low and get into early production, get cash flowing. But my concern is, well, the money that you're going to generate from the smaller open pit scenario, that's going to have to go back into the ground to build this thing out. So the question is more like, well, how do you move this forward and create size and scale and make money?
Yeah, no, great question. What we're looking to do here is, number one, to answer your question, it's extremely profitable. Our PEA contemplates 43.5 million of free cash flow in the first 3 years. Those first 3 years are that smaller production profile. And the reason we've decided to go that way is if you stay under 75,000 tons in BC, you can defer the environmental assessment process. So we engage First Nations. We've had really inclusive conversations from the very beginning, got their support. We've been able to come up with 3 MOUs with some very influential communities surrounding the project. We've also partnered up with Newellman Lake, which is a majority-owned First Nation contractor. They operate many mines here in British Columbia. And, we're really excited to have them on board. Creating jobs for local communities is something we set out early. And then, with that free cash flow, there's lots of money to continue expanding. And frankly, there's lots of money to, complete our environmental assessment, which allows us to ramp this up to 50,000 ounces a year production minimum if we're successful in that. So right now, the idea is get into production. And as soon as you're in production, immediately start the environmental assessment process. We've set aside $2.5 million to get that completed. And then our goal is by year 4 to be ramping up our open pit scenario, as well as if JDS's PFS comes out as expected, to be bolting on an underground scenario as well. So, there's lots of opportunity for upside, and the cash flow that kicks off is more than going to pay for all of that. And as a goal, management is hoping to kick off a dividend Q1, Q2 next year. Again, we're being told that's really aggressive, but we want to support our early shareholders. And again, because we're equity remunerated, we figure a dividend would be a healthy way to pay everybody equally.
That is aggressive. and quite early, given, I know you'd be in production, but is it necessary? Are there better ways to do it? I mean, you'll have your free cash flow will more than cover the activities you outline there, but you've talked about the people on your board and access to projects elsewhere in the world. Isn't that a smarter, quicker way to get some scale, reward your shareholders?
Yeah, I mean, we'll continue looking at new projects as well. We're vetting new projects that are similar near-term production. We're also looking at some blue sky options to bolt on. I mean, we don't have anything finalized yet, but it's always a big thing for us. We know we have to grow. We know we have to show additional scale if we want to attract those larger institutional investors. But for us, with the cash flow that's coming off on this and the way that we've budgeted this out, we can be extremely aggressive on the end of the drill. We're going to have money for corporate development, but it's something that management would like to do, is to kick off a dividend, and we're looking to build a larger company here. So when there's a lot of different ways to do that, and we don't think it's just exploration that is the way to do it. We're kind of doing a little bit different model, and the feedback on how we do stuff is sometimes, I've never heard of a junior doing that before. But that's okay. I mean, again, I come from a private equity background, and I want to see revenues. I want to see profits. I want to see dividend distributions. But most importantly, I want to continue showing the market growth and scale, and that we're real and building a real gold mining company here.
It's interesting. Definitely an interesting approach. Giving dividends at so early in the mix, as it were. What are your ambitions? When you talk about we'll look at stuff and we will look at acquisitions and so forth. I mean, when?
Yeah, I mean, we're currently vetting opportunities. I mean, obviously, with our early success here, I think there's a lot of people who are looking at Gold Mountain as an opportunity to maybe vend their project in and ride the wave with us. But we're going to be extremely picky about the asset that we bolt on. We really like the Elk project. We think we got an excellent deal when we purchased it from Equinox Gold. And we're not just looking to dilute the company with anything. It's got to be a quality asset. But we also know that we have to continue growing, and part of growing is beyond just the end of the drill bit. We're going to need to look at other projects. I would love to find another brownfield site that had 4 or 5 other people break their pick before we got there, and we get to pick up all that capex at a discount. But I'm also open to looking at some blue sky opportunity as well. It's all going to come down to if it makes sense for the company and if it makes sense for our shareholders. We don't want to be dilutive too early. I think we've done a good job of keeping the structure fairly tight, and we want to continue down that path. It's been not the strongest gold market, but if you look at our stock chart, we've held pretty steady. Had a nice increase from when we began trading December 31st. And that's the trajectory we want to stay on. We want to continue delivering good news flow and good corporate updates and keep the market excited about what we're building here.
I think you're definitely doing that. I mean, the people are reacting really well to the story that's being told. What are you worried about in all of this? I mean, you're going to have to deliver this at some point. You've got to hit those deadlines. You confident?
Yeah, I'm extremely confident. I'm fortunate to work with some really intelligent guys here. We've been nose to the grindstone. COVID has provided an opportunity where there's not much else to do but drive this project forward. And we've been extremely focused here. Our conversations with the provincial government are going extremely well. We submitted May of last year, sorry. We're through round 1. All responses have been provided. We received round 2 and provided all the responses on that. Initial feedback right now is there's no additional rounds required. So fingers crossed, we're hoping to be able to deliver on our promise of a permit in late Q2 here. And we're really driving forward there. I mean, at that point, we'll be getting into construction. We're looking June as our construction month. July, August will be waste rock mining. And then September will be pay dirt and looking to deliver material to New Afton's facility in October, and then hit commercial production and first revenue in November. We have great payables with that New Afton contract. 17 days after we deliver, they pay us. So again, it's a really lean startup with great cash flow kicking off of it. We are going to do another raise once the permit comes in, but that likely will be our final raise, given that about $4 or $5 million in revenue kicks in each month for the first 3 years once we reach steady state mining, which we anticipate to be November, December.
Okay. All seems seamless, and I guess it always is on paper, right? What are the other options around toll milling around you? Are there other mills that you could go to? Is there competitive tension around pricing and margin?
Absolutely. We've been approached by 3 or 4 different groups. The one closest proximity to us is the Nicola Mill, which is a great little facility there. They're permitted to receive ore from other groups. But New Afton came along with a great set of terms for us. There's no cost on toll milling. It's just a straight metals payable. The split on that is 89% in our favor, 11% in their favor. And when you look at the economics, it's pretty hard to beat. A lot of these other toll mills need to be started up. They require some CapEx. Whereas, after we took a look at the blended metallurgy between New Afton's facility and our ore, it's a perfect setup for us. Great recovery. They're an 18,000 ton per day facility that's got lots of headroom. Again, they're looking for that bump in their gold grade. So it'll just be a blend of our material. And, they take on all the risk of recovery. We just deliver the ore. And at that point, it's in their possession and they own it. So, for a guy who's building his first mine, it's we've tried to build this thing as foolproof as possible and, as leanly as possible to give us the best chance at success.
Yeah, I mean, it's interesting. There's a lot of the right components in here for sure. Well, Kevin, great introduction to the story. First time we've heard it. I enjoyed listening to that. You've got a lot of deliverables over the next few months, as you've just outlined. You've got to hit them all now. That's the easy bit of being a CEO. You just need to do what you say, and the rest follows. Stay in touch. Let us know how you get on. Okay, genuinely interested to follow up with you.
Absolutely. Thanks so much for having us, and looking forward to coming back.